This week, the war will test the markets, and the most direct impact will be the crude oil market. The likelihood of crude testing $80 a barrel is very high, and this is the highest it's been in the last 4 years. Of strategic importance is the Strait of Hormuz. About one-fifth of global oil flow passes through it, and if that remains closed, the speculation here is that oil could touch $110 a barrel. Well, how does that play into the interconnection of the fixed income market is the fear of inflation. Investors had turned a blind eye to inflation that was playing out rather nicely and were more focused on employment, wherein we are, because of the AI fears, we are in this low hiring, low firing phase. That mandate of the Federal Reserve was garnering more interest or more attention in the market. Let's talk about the 10-year Treasury as a proxy of risk in the market. 10-year Treasury as of Monday is at 4.04%. While you will see financial articles or the financial press talking about how treasuries are really hammered today, however, that is not the case. On Friday, treasuries closed at 396. 404 is not, it's really 8 basis points higher when the market closed. Pre-Iran crisis or that started over the weekend, we were dealing with the tariff issues. And the US Treasury market actually absorbed most of the impact of that uncertainty and volatility. A lot of capital fled into the Treasury market, bringing yields down to 396 on the 10-year part of the curve. Well, I know tariffs right now are a story on back burner, but this is what has happened with the tariff story after SCOTUS, so the Supreme Court struck it down. The tariffs currently are sitting at an average effective rate of 10%. That was slapped on them by Section 122, which has an expiration date of 150 days. So there's some respite there because sectoral tariffs still stand, and we have that average effective of 10% tariff. The 170 billion of refunding, well, that is also on back burner, and most likely the Treasury notes or bills will finance that. However, right now the market is spooked over how does this war play out. The length of the war will have a very meaningful impact on both the stock and the bond market. In addition, the new fear or the dormant fear of inflation has entered the fixed income markets.